Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio. This week, we're looking at gold at time of recording, sitting around 1814. Silver, still in the low to mid 24.15 at the moment. Platinum did scrape just above $1,000, sitting at $1,003. And palladium up to $24.45. The dollar has decreased back down to around $92.50 after breaking up into the almost 94 range. And the Dow is sat relatively stagnant, still just a couple hundred points above 35,000. So where would you like to start today, Robert?
Well, it is the first day of September, and September is usually a decently strong month for the price of gold. So it wouldn't be surprising to see gold start to stair-step higher here, but I do think there's a likely scenario for the dollar to maybe have another little rally up above 94, possibly putting some downward pressure on the metals. But we'll wait to see. Nothing's too clear, I would say, today, Miles. Not much movement, just sideways a lot with the market. So looks like a big move is in front of us in the next few weeks, but it's hard to tell which way it's going to go.
Yeah, it seems like as we're ending the summer months here, moving into fall, and then obviously some of the geopolitical issues taking place right now.
Just a few of those,
that we'll certainly get into. Seems like everything's kind of tired. Gold had that big drop back in the beginning of August, which we've now recovered all of, and we've taken a 3-step drive up to recover that, but we've done it with RSI divergence, which may mean that we're going to see a little bit of a pullback here in gold before it were to continue going up from there.
Maybe the markets are tired, just like people are, of wearing masks and, tired of blunders in the world that could have been prevented.
True. I mean, even silver. Silver has continued to step up since it came down to about $22.50. We're up over $24, but same thing. It's doing it incrementally. It's doing it with this RSI divergence, which is just showing that the bull market, short-term bull market, over the last couple weeks is just kind of running out of steam. We're seeing it in platinum. The only place we're actually not seeing it right now is palladium, which has taken a nice move up from around $22.50 up to $24.50. But still, it's likely we could see it in palladium along with the other metals because it looks like it's taking a stair-step pattern up. Even the dollar, like you mentioned, we expect to see possibly a little bit stronger dollar rally. The dollar's showing RSI divergence. And the Dow is showing RSI divergence. I think everything's just tired. Everything's been going up. It's been slow and steady. It's been these incremental steps, and eventually you're just running out of gas.
Well, you mentioned being tired, and I'd say that some of the rest of the world is tired of our influence, negative or positive, in certain places. I saw an interview with Eric Prince, who created Blackwater, the contracted military group, and he was interviewed on Tucker Carlson, and he brought up very clearly on national news about how the dollar is backed by more of the military than it is anything. And obviously the news of the military here with Afghanistan, he's indicating there is going to be an effect directly on the dollar. I would say people's trust is being broken. And if it's not already been broken, it's definitely being broken by some of the moves that have been made, intentionally or not, with recent events. Bottom line is there's trust being broken, and there is an international frustration, I would say, over some of the moves that have been made. And I think that's going to cause a long-term decline in the value relative to the trust of the dollar. And it's really unfortunate to see this happening here in the world, and especially as an American. It's very hard to see things being done that are affecting things negatively for our future, because I think that's where we're headed. Is the dollar is going to take a significant hit because of a lot of these different things playing out, because the trust is broken.
Yeah, I think that's a really good point. I mean, here on this show, we're chart guys, so we tend to focus on things like money supply and pricing fluctuations, but there is a reality, not just the increase in the spending, which we talk about constantly, that is required to continue to cover the outstanding debt that the U.S. government has already built up. So we talk about the increase in the spending, the increase in money supply, inflation, to put all that under a single umbrella heading. But there is that confidence that you need the world to have in the primary reserve currency. And traditionally, like you said, that's been backed, well, since 1972. The only thing that's backed that up is the good name of the American government and American military, and it is the military that gives us that stability
and power
and authority and the ability to bring justice down on the heads of that which we decide deserves it, I guess, is the best way to put that. But the second thing, of course, has been OPEC and the oil trade. Now, we've seen the OPEC oil trade start to deteriorate as different countries like China and Russia are securing their own oil reserve pipelines outside of the OPEC system in currencies other than U.S. dollars. And now we're dealing with a deterioration of the good faith and trust in the American military, whatever that good faith and trust happened to be prior to this past couple weeks. So I do agree with you. So we can sit here and we can look at charts and we can talk about the dollar index, again, the weighted index moving up and down based on what the charts are doing. But this may be one of those times where I, as a chart person, might just kind of back away from the table a little bit, because I think there's more political, philosophical theory involved in what happens going forward than just where the buy and sell order's sitting.
Exactly. I think there is a bigger movement going on, a bigger story here. And I think if you look back through monetary history, when you've had changes of power, changes in the monetary power, the reserve currency, it hasn't just been overnight that it developed. It's taken years and decades to get to a place where one power just starts to decline and another one fills that void, kind of like a pie. You're not creating another world. You still have the world, you have power. It's like a pie. One powerful country's pie slice gets reduced, another one fills that void. And so I think we are actually living through the process of the next shift in power. And I don't think it's going to be positive for the dollar, because you've had trust being broken repeatedly. And here's a big one here in the news. And that trust is what's backing the dollar. People trust it. And so when you break that down, I mean, you can go all the way back to, like, what was it, 2015, when the BRICS countries, Brazil, Russia, India, China, South Africa, they put together their own BRICS bank and funded it with something like $50 billion so that they could trade directly without having to use the dollar. So it created their ability to transact directly with each other instead of having the need to hold dollars. And that was 6 years ago. So that we're seeing a progression. It's not just, all of a sudden there's a catalyst, there's an overnight thing where the dollar loses its reserve currency. My opinion is that it probably already has lost the significant reputation that it is, and we're living through this process, and it starts with the trust. The trust is being broken, and it starts with that, and it continues to move. I'll steal an analogy from Rob, who's been on the show the last few months. Rob talks about trust being a bucket. You fill up a bucket drop by drop. Each drop is a little bit more trust that you're putting in that bucket. Well, you know how you break that trust? You just kick the bucket over. So however much water is in the bucket, you can kick it over in an instant. And I think that's happened here in a lot of ways. We've kicked the bucket over. Well, how do we get back to a full bucket or even a half bucket of trust? It takes drop by drop, and that takes a lot of time. So I'm not saying that this is the end of the dollar. I'm saying that we're in a progression where that bucket has been kicked over or spilled over, and it takes a long time to get back to a level of trust where the international community is going to trust what America is doing. So that is going to have a direct correlation with the dollar over time. The dollar may rally to 94, big deal. We're at 92 and change. That's not the big trend. The big trend is trust is broken. The dollar is going to suffer over a period of time. And I think that's a catalyst for gold to move higher over time.
Well, yes, and that's why you can trust things like gold. Gold having the longest history and as a means of preservation, as a means of exchange when necessary, outside of a fractured system, if that's something that we're moving towards. What's interesting about some of these big news events is they add validity to something that has been a mantra of mine for a long time, and that's news doesn't move the markets, it simply speeds up or slows down the direction it was naturally going anyway. So I don't know anybody that for years has been saying the US dollar is actually getting stronger. We all know the US dollar is getting weaker. So when you have things like this happen, they can quickly increase the velocity at which the US dollar is going the direction that it was intending to go in the first place.
Going anyway.
Yeah.
Yeah. The crucial line in the sand, I think, for the dollar is 90 or 90-ish. And breaking below that, you probably quickly head to around 80 to 82 and then down to 70, 72. I think 72 or just below 72 is the low on the dollar index back in 2008. And boy, if we get down there, that's what, nearly 20% move from where we are today. That's just on the index, the weighted index. And looking at around the world at your different options of investment, you have, I guess, maybe 5 major categories of investment. You have, just like fingers, you have 5 or a 4 and a thumb. You've got stocks, they're at nearly all-time highs with relative value as well as nominal. You've got the bond market with interest rates as low as they've ever been in human history. So don't really want to touch stocks or bonds with them being overvalued. And David McAlvany talked about how the Fed owns most of the bond market anyway. So who are they going to sell to? Beyond that, you've got real estate. Real estate's obviously in many parts of the United States been pushing to all-time highs. You have currencies, none of which are backed by anything. So right there, I rule out 4 different categories of investment from just not really wanting to touch markets that are too hot. And it leaves commodities. And within the commodity space, you can invest in different commodities, but being able to actually own an asset that you can take delivery of, it's yours, it's quiet, it has no counterparty risk. Gold fits that bill. So if you break down trust on one side, you look at the valuations of other options for investment on the other side, and you start to whittle down and basically rule out what you don't want to be invested in, you're left with just a handful of things. And I think gold is going to stand alone as an investment, as a safe haven, as something that people can trust. It's going to play its own market, and it's going to be in its own world of an asset that people can trust. I think it's going to reemerge as a safe haven for the general public. A lot of the general public does not own gold, you have to say. I mean, would you agree with that?
Yeah, and it's going to take a very small percentage of the general public
to turn to gold.
For the world to find out how little there is actually out there and how valuable it actually is.
Yep. And adding to that with the Basel III regulation for European and UK banks, they're saying gold's a risk-free asset, being a tier 1 asset. Physical gold, the real stuff, not a contractual agreement that you own gold, actually owning the real thing. And so I think we have a huge bull market in front of us with gold over the next coming years. And so today, looking at the price, does it go from 1815 where it is today down to 1730 before it breaks the old high of almost 2100? Price is going to be bouncing around here, but I think you've got a huge long-term trend ahead of us with gold moving a lot higher.
Right. You know, it's funny, having done this show now for 4 years, 5 years, looking back over some of these, let's say, less chart-oriented conversations that we've had as things have popped up.
Because this is definitely one of them.
Right.
Right.
Which we picked a good week to do it. So,
right.
But having these less chart-oriented conversations over time, I mean, what are some of the things we've talked about? Basel III and the report about gold, like you just said, being considered a non-risk asset, a zero-risk asset. That has a very specific implication that's pretty clear. Inflation, we've talked a great deal about that. A year of catastrophe in 2020. COVID was maybe the biggest monster on the shelf, but there were a lot others last year. 2021 being a very rough year in its own right. Some of the real estate issues, interest rates, unemployment rates, political crisis across the U.S., not just on a national scale, but in smaller locations, Seattle, Portland, Detroit, and OPEC, and the shift in oil buying from some of our, let's call them less friendly sovereign governments out there, and what's been happening in Venezuela. We all seem to have forgotten about South America over the last couple of years and the starvation and everything taking place down
I think
there.
You could continue this list pretty long.
We could continue the list pretty long.
Where are you going with
this? My point is everything is clearly pushing the same direction. Everything is pointing to where we started our conversation, a lack of faith in not just the U.S. government and some of the global decision-making and implications therein of U.S. military and U.S. government, but governments in general in Europe, in the United States, in South America, in the Middle East. And when you start to lose faith in the underlying structure of things, you start looking to take on more of that responsibility yourself for your family and your smaller communities. And it's not going to take a lot of those people to end up having a very dramatic effect on the availability of external assets other than U.S. dollars, whether that's gold, whether that's Bitcoin. If Janet Yellen allows people to continue to use Bitcoin, or if somebody doesn't take the place of Elon Musk deciding he's not taking it anymore. I don't know what you do with Bitcoin now that you can't buy a Tesla with it. But whatever that ends up being, something is going to appeal to the general public as a means of protecting your family, your accrued wealth, your land, your property, your assets in something that you feel is a safe haven. And last time I checked, there's only ever been the one answer to that question for about the last 10,000 years. So I think that's why you and I are going to keep doing what we're doing, until we have a gold-backed currency and we can go find jobs where we're producing something else in the world. I'm happy to continue to exchange worthless green paper currency for real elemental gold in a pure form that can be hidden, carried, transported, traded, used, and will increase in value along the lines of a decreasing currency, like we showed in that M2 versus gold chart that we put on the screen a couple weeks ago.
And let's not forget silver and platinum. We've been talking a lot about gold this show, but silver and platinum are undervalued relative to gold a bit, and we'll follow suit. So silver chart looks good. I also like the platinum chart. So I think the point's been made. That does it this week for Golden Rule Radio. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, our website, McIlvaney.com, or give us a call, 800-525-9556. Thanks for listening. Have a great week.